Hey everyone. All right. Welcome to the public portfolio session live on Facebook on Fridays together with me. All right. This is Terence over here, and let's get our session started, shall we? All right. Let me raise myself a little bit higher. Okay. All right. Now, hi, Mei Ling. All right. Thank you very much for joining me again on Friday. Hi, Jason. All right. Now, so let's get our session moving. All right. And today, all right, I will be looking to add another portfolio cash position. All right. Hi, Mark. Hi, Mike. Sorry. All right. Apologies for that. Now, so for those of you who are joining me for the first time in this Facebook Live today, all right, please go ahead, see the banner over there, right? Type it out or click on it inside the Facebook post, right? It is streamyard.com/Facebook, right? You will be brought to a pop-up page. In that pop-up page, you will just click on the Facebook button, right, which actually which actually approves your profile, right, so that we can actually see you on the back end of our StreamYard software over here. Right now, the reason why you need to click that button over here is because otherwise you appear like the banner that I put up on the screen over here. Right, we have a Facebook user again, right, and we have two of you. Right now, I have no way of identifying who are you, right, unless you go ahead to the link, right, which is streamyard.com, all right, and click on it, okay? All right, now, thank you very much in advance, right? And also, let me quickly get the disclaimer out of the way, right? In these public sessions on Friday, right, my aim, right, is to do this as a form of education, right, to let all of you, all right, the public over here, see how we can build a very simple, all right, non-time sensitive portfolio, right, which means it's truly laid back, all right? Every week, we spend about 5-10 minutes analyzing a trade, putting the trade inside our portfolio, right? And just one trade every single week, right? And then we are aiming to achieve a 20% ROI on this simple portfolio, right, at the end of every year. Now, this is our year 2 over here. And how did we do for year 1? Right? We did and break in a 17% ROI in year 1, which starts us from August 2020, right, to August 2021. Right? It's not exactly the easiest time to trade, because by August last year, the stock market is already currently overvalued, right? And continues to be overvalued, right? But we still rake in a 17% ROI on our all cash portfolio, right? So everything is done in full cash position. There is no leverage taken, all right? Okay, and this keeps everything safe. We can afford every single trade that we are taking over here. Now, what's the strategy that we focus on these Friday sessions? We only focus on one simple strategy, and that's called the portfolio puts. Now, is there an alternative name when it comes to portfolio puts? The answer is also yes, right? In a technical term, all right, it is also called the cash secured puts. So we are selling put options, all right, with full cash to take on the responsibility of buying the stock, right, if anything happens, right? So you have the cash, you can afford to own the stocks. So there is no risk at all, right, as long as the stock is fundamentally safe and fundamentally strong. Right now, so some of you have been asking the question, Terence, in this case, why don't you just go and own the stock outright? Because, right, I'm just looking to generate cash flows. I'm looking to get those 20% returns. And, right, by just doing this in a very simple manner, it allows me to target very strong fundamental stocks, which are also very boring in nature, right? So these are the stocks where you just expect their stock prices, right, to bring you a return of about 5% per annum. Right? Because they're safe, right? As simple as that, right? Your big blue chips typically return about 5 to 10% on an average in the long run, right? By adopting an option selling approach, we can actually bring up the returns, right? Despite using the same amount of capital, right? So I like this way much better. I think my capital is put to work harder, right, than actually owning the stock, right? So this is my preferred choice, right? And this is what we do in these Friday sessions. Now, what if you want to achieve much bigger and higher returns? Now, once you see how I operate, right, once you see the style in which I take, right, if you do like to find out how you can achieve bigger returns trading the same stock, right, okay, using option strategies that require lower capital requirements, right, then you can opt for any of our mentorship programs, right, where we help train you to become a more effective, more efficient option trader. Yeah, okay, all right, now that is out of the way. Let's get to our portfolio, okay? Now, so I start off the session over here, right, talking about the markets, right? So I want to bring to your attention what the market looks like, where the danger lies, and then we'll go to trade positions, and finally, right, talk about new positions that I wish to put into the portfolio over here. All right. Okay. Now, so hi Nian again. I'm live. All right. Just kidding. Okay. Thank you for joining me. All right. Now, so same for the rest as well. Brett, Susan, thank you very much for joining me week after week, and Jimmy, of course. Now, so before I do anything at all right, let me quickly go to the markets. Right. So I've said last week. All right. All right, that markets right show no signs of bearishness at all. Right. But 1 week later, things have changed, right? 1 week later, things have changed. That's just how it is, right? Now, I tell you, right, based on what I see over here, all right? And what I see right now is this, right? If I just put up a very, very simple indicator, right? Okay, now, if I put up a very, very simple indicator over here, now you will see, all right, that the stock, the index over here, perhaps, maybe if I use the SPY, all right, now, so pretty similar, all right, okay, but what we're seeing over here right now, okay, is that the stock has tried to challenge the new high, all right, okay, but it didn't manage to break the new high this time around. Yeah, okay, the whole market, all right, rallied back after a correction, right? It tried to test the last high, but it didn't manage to break this time. And on top of that, right, we have a weakening, all right, technical strength over here. Right now, so for the short term being right now, I actually see that we may go into a correction phase, right, with the markets, right? So there is a danger of a correction phase in the market. So what does this mean right now? It simply means this. If you feel that any of your trade position requires protection, start building them now. All right. Okay. Otherwise, when the correction comes, a lot of your high flying stocks will start seeing big drops in prices. That means we can expect maybe a 5% drop, a 10% drop. Right now, if you want protection against those drops, start thinking about how you can protect, right, those stock positions right now. Yeah, okay, all right. But if you don't, right, you're comfortable, then just stay with what you have. Okay. Alternatively, if you're looking for new trades, right, then what you need to be looking for are strong fundamental stocks that are not loved by the markets. So when I say not loved by the markets, which means these companies are fundamentally strong, they are generating profits, right? But yet their stocks, all right, are not benefiting, all right, from the current market. So while the markets are hitting new highs, these stocks are trading at their 1 year low or 2 year lows or 3 year lows, right? And they're a profitable company. Can you imagine that? All right, we did this a couple of rounds over here with Intel, right, and then with a couple of other trades as well, right, and that's what we've been doing, right. When the market gives you, when the market is trying to give you lemons, right, then you just got to try and make lemonade, right. That's just how trading works. We cannot bend the market, right. We just have to learn to make the best out of the market that we have, right, and that's something I've learned over the last decade over here, right. And by sticking to safe, boring stocks, it allows me to rotate around these stocks, right, and still sleep very well at night, building such a simple portfolio, right? So here lies the risk of a potential market correction, right? So hence, like I said, in this session live right now, if you need protection, this is the time to go get some. Yeah, all right, this is the time to go get some. Right now, so with that out of the way, let's quickly do a check on our portfolio. All right, now our first position is we are still assigned the stock, all right, on VZ over here, all right, and we have sold the call options, which expire on the 17th of December. Right now, we did this about 3 weeks ago, right? And right now, okay, there's nothing that requires to be done over here, right? The stock has languished a little bit, all right? So no actions required for now. Right now, let's go to our next position, right? And that is real, right? So our real stock right now, okay, we have sold a call option that expires on 15th of October, right? Our break-even price on the stock assigned is currently about $75, right? So real right now is trading only about $60. So there's no meaningful call options that we can sell, right, that will pay us any premiums at all. So for the time being, I'm just going to keep the stock. I'm going to pocket the dividends when the company pays them around, right, and then just wait for the stock to recover, right? Am I confident that the stock will recover, right? Fundamentally wise, there is no other signs that tells me, right, why this stock price will not bounce. Yeah, okay, so I'm staying with, right, my directions over here, right? If the fundamental change, it will force my hand, right, to actually cut loss on the trade. But there's no change when it comes to the fundamentals, right? So for now, we're sticking with this stock, right? And moreover, right, okay, if you look at the current stock right now, right, it pays a 12% dividend return, right? This stock only pays a semi-annual dividend, which means it only pays dividend 2 times every year, right? But the dividend payment is worth $3.76, all right, okay, an entire year, all right, an entire year, all right? Now, so that's a hefty, right, dividend payment, right, that we're getting over here. No, that's $3.76 per half a year. Yeah, all right, per half a year. I got that wrong over here. All right, so that's a hefty, almost $7 and over, right, dividend when it comes to a per annum basis, right? And that's really, really fat. Right now, going back to the adage where, when we buy properties, right, if a property can pay for itself in 10 years, right, that makes a very good investment, right? And can you see, based on the dividend return right now, right, this stock will pay for itself, right, after 10 years as well, right? Does that sound like a good venture? Yeah, all right. So that's why I'm trying to drive at over here, right? And the company trades at a 5 PE, everyone, 5 PE. Now, this simply means that the company is still making profits, right? And the stock price is so low, right? That's why you see a price to valuation, right, of 5 times what the company earns, right? So is this looking like it's unloved by the market? Definitely, right? So should I cut my losses on such a scenario? Definitely not. All right. Okay. Now, so I hope that drives the point home, right? And all of you managed to learn something from this. Okay. Now, next one over here, HIMX. Right now, our call options, the current one expires today, right, on the 19th of November. All right, and the stock price has fallen back to about $10. Right, so there's probably nothing, all right, that we can really be doing over here. All right, $12 call. Right, we can actually aim to sell a $12 call option again, all right, for the next expiry, which is a month from now. All right, but let me quickly have a look, all right, at how much we need to pay if we close this trade today. All right, now if we close this trade today, we'll probably have to pay 5 cents for this. All right, so I'm not going to do so. All right, so I'm just going to let this current call option expire by the end of trading today. All right, and then, all right, look to add the $12 call option for December, all right, in our next Facebook Live session, probably next Friday. All right, so next Friday, we'll be adding a new set, okay? All right, so nothing for today as yet. Now, our next position over here is GILD, all right? And for GILD, we have a 17 December 67.50 puts, all right, for $3 over here. All right, so let's go have a look over here at what we have. 17 December, all right, 67.50 put option, all right? This is the one over here. All right, we sold it for $3. All right, and right now, all right, it is worth about $1, right, and 70 cents. All right, $1.70. Right now, so here's what I'm going to do over here. All right, we have some decent amount of profits, right, and this trade lasts for about another 1 month. All right, another 1 month. All right, and we collected about all right, we have collected about 40% of the premiums that is at stake over here. Right now, with the impending market correction that may come around. Right, so what I'm going to do is I'm opting to take some profits off the table as well. Right, so since I have it on this trade, right, I'm going to take my profits off the table, right, for this particular trade over here today. Right now, so I'm going to close the 67.50 put options, all right, for December expiry on GILD. Okay. Give me a minute. All right, now, so I've closed this trade over here and I've decided to pay $1.68, right, to get this trade closed, right? So my order is filled, right? And let me just quickly show all of you over here, right? So I bought back, right, my 2 option contracts of the 67.50 put option on GILD. Right now, I got this done for $1.68, right? So that makes another profitable trade, all right? And we're out for some decent cash flow, okay? All right, now, so, oh, I overpaid. Oh my goodness. Right now, so it's about 167, 168. All right, but it's still good after all. Right now, so I closed this over here for $1.68. All right, we did this on the 19th of November. All right, now, so this trade lasted about 5 weeks over here. All right, and this will take 13,000 out of my portfolio. All right, now, so that's $264 in cash flow net into the pockets. Right, and that makes a decent trade. Now, so as you can see right now, all right, my current cash flow that is being used, right, invested in the market is now down to about 84,000. Right now, so let's look at our other position over here. We have a trade on Intel. Now let's see what Intel has done for us this week. Oh man. All right, so we have Intel over here. All right, and we have the December 5250 puts. Right, that's now trading at about $3.40. All right, now, so this trade is not profitable at the moment. All right, so we're going to leave it for now. Okay, now, next position over here is CPB. All right, now, so what do we have on CPB over here? We have a $40 put, which we collected $1.10 for. All right, let's see what it's worth today. All right, it's worth about 75 cents. All right, if I close this today. All right, so the profits are nowhere near anything substantial. Right, and the PE ratio still shows me that the company is really cheap. So I'm going to hang on to this position. All right, our next one over here is Western Union. All right, we sold an 18 put for December. All right, so today is worth about 155. So we are a little bit underwater on this position as well. All right, so I'm just going to leave it. All right, now next one over here is Hog. All right, we got in just last week over here. We sold the $36 puts for 91 cents. All right, let's see what it's worth today. All right, now we can close this for about 75 cents today. All right, now profit is nothing to shout about. All right, and I still like this trade, so I'm going to hold on to the position. All right, so that's the only thing we're doing today when it comes to management. All right, so we have closed the GILD trade, so I'll just take this off my watch list for the time being. All right, and let's go right to the new stock that we're trading today. All right, now, so anybody made profits on GILD as well? All right, if you did follow the trade and you made some profits, can you just leave a comment inside the Facebook live session? All right, so I do know that some of you have actually benefited, all right, from these sessions that we are running every week. Seems like Andy is not here today. Andy, are you around? All right. Okay. All right. Now, so I will be looking to add one position today. All right, and let me quickly go into that stock over here. All right, so like I said, all right, I'm looking for stock. Andy is here. All right, Jimmy, you're right. Andy is counting his profits. All right, Andy. All right, you are here. All right, welcome to the session, Andy. All right, now, so today, what I'm going to do is I'm going to go into another one of those unloved stock over here. All right, now, so today, the unloved but profitable stock is going to be, all right, like Andy said last week, all right, are we doing it on Tupperware? No, all right, but I'm doing it this week. All right, so I'm going into Tupperware this week, all right, and we're going to trade, all right, Tupperware, okay? All right, now, so what am I going to do? All right, so Tupperware is trading at about $16 right now. All right, so let's see. All right, let's do this. I'm going to sell the $16 put option, right, that expires in December. All right, so this is a quick trade as well. All right, why? Because I feel that the stock has been punished, right? It has been unloved by the market, right? And I don't see going down very much further, right? Now, so I don't see going down by much, right, over the next 1 month, right? And even if it does go down, I'm more than happy to own this stock, right, at the current price over here, right? So I'm going to take the $16 put option, right, for 17 December expiry. Right, I'm going to take a 3 option contract position, right, which is the typical size over here. All right, and I'm going to do this. Andy, stop jumping me. But Andy may already be in. All right, now. All right, awesome, Desmond. All right, congratulations on the profits over here. All right, awesome. All right, I've got an order over here for, it's not taken. All right, I'm done. All right, now, so I'm not going to haggle too much over here. So what I did was I sold the Tupperware, right, December 17, 16 puts. I sold 3 contracts over here for 66 cents. All right, so as you can see, this is a trade. It is filled over here. All right, okay, and my order is open. Yeah. All right, now, so let's quickly fill this up, all right, into our portfolio. And this will be trade 77, right, since we started this live session. All right, now, so Tupperware. 17 December, $16 put. Right, this is going to be a non-expensive trade over here, right? Why? Because the stock isn't very expensive, right? Cost you about $1,600 for every 100 shares. So we sold 3 options, right? So this trade, right, is probably only going to cost me $4,800, right? So like I said, it's not one of those very, very expensive trades, right? So we're in on this. So this will pay me, right? How much did I get? 66 cents. Right, this will pay me $198 in cash flow. All right, and my portfolio is decent. All right, now let's see our ROI first, okay? All right, because I'm thinking of something that I want to do at the back of my mind right now. All right, so this trade pays me 4% ROI, all right, in 4 weeks from now. All right, so the annualized ROI, oh my goodness, it's hefty. It's very, very high. Right, so this trade pays me a 53% ROI if it expires worthless 1 month from now. Right, so that's going to bump out our total returns, right, if this trade works out. Right, so I'm more than happy with this trade. All right, I'm definitely going to take it. Right, it's already done. Yeah, okay. All right, now, so Andy, all right, there is no worries about all this because all these, like I said on Fridays, are fundamentally strong stocks. Right, so even if the trade doesn't work out, just like what happened to VZ, just like what happened to HIMX and Rio, right? Okay, we'll just hold on to the stocks, right, until we turn them profitable, right? So that's how the portfolio works over here, right? Now, so unlike your case, right, I will not look to average down, okay, on the position that I take, right? But I'm more than happy to hold on to the current position, right? Because I always believe in deploying capital, right, into new stocks rather than overloading on just one stock, right? Because I achieve the diversity over here. Right now, so here's what I'm going to do, everyone. Right, if you have questions, right, you can actually start posting them inside the comments. Right, but what I really want to do today, right, as it seems, right, is I want to add a second position. Right, how many is up for a second position over here? Right, if you'd like to trade a second position, all right, can you type yes in the chat box? Yep, Andy. All right, I know you have the capital. Yeah. All right. So we have a yes over here, but we have a Facebook user as a yes. All right. So I have no idea who's the first one who left the comment. All right, because you're a Facebook user to me. Okay. All right. Now seems like everybody wants a second trade. It's going to be another one of those boring companies. Okay. All right. Now, so here's what I'm going to do. I'm going to get into this company called Eat. All right. It's a company that runs restaurants in America. Right. It's called Brinker. All right. Now, Brinker. All right, now, so why am I getting into it? Very simple as well. All right, it's trading at a PE ratio of 13 over here. All right, okay, so the company, right, is dirt cheap right now. Right, it's trading at a 13 PE ratio. All right, now, so I'm gonna capitalize on this. All right, and let's go for a $35 put option since it pays pretty huge premiums over here. All right, so that's about another $4 drop from the current stock price. Right, in the next 1 month, I think this is a pretty good trade over here. Right, so I'm going to take a position on Brinker over here. Seems like we are participating quite a little bit on the year-end rally. Right, let's see if we get it. Right, but even if we don't get it, these stocks are all very highly undervalued stocks. So I think, right, they will be defensive enough, right, and they will actually turn out a pretty good performance, right, even if the market turns lower. Right, so I'm more than happy to take trades in these positions. Right, I'm working my order. I'm trying to get it done over here. Right, let's wait for a couple of moments. Seems like some of you have already taken the trade. I see many of you doing it at 76, 77 over here. I can see your orders. All right, why? Simple, because the last done price is constantly changing. Who's jumping the guns over here? All right, okay, I'm in as well. Right now, so I've just hang on for a minute. Okay, I just sold 3 contracts of the Brinker December 17, $35 puts for 76 cents. All right, I took on the 3 option contract position. All right, so let's go record this down over here. All right, so this is trade 78. Yes, markets are coming down. Yes, markets are peaking, right? Yes, and I'm adding 2 trades today. Well, how ironic is this? It doesn't matter, right? Because when you know what you're doing, right, all is good over here, right? Because you know exactly what you're looking for. So this trade is going to pay me $228, right? It's going to require $10,500 investment requirement, right? Just in case I need to buy 300 shares at $35 a piece. Now, what's the ROI on this trade? It's a 2% return, right? Which means it still brings in an annualized return of 28%. That's more, right? That's more, right, than what we are expecting, right, out of this simple portfolio, right? So hence, I'm definitely going to take this trade. Okay, all right, now, so that is the 2 stocks that I'm adding over here, right? And I'm going to go to the comment section and see if there's any questions, right, for what we've done so far today. Right? It seems like there isn't any at the moment. Yeah, right now. So I'm going to give a couple of moments and a couple of minutes, right? If you have some questions over here, right, we can be doing this, right? Mike, right now. So the question is not about you having $20,000, right? Because this official portfolio that I'm building right now started off at $100,000. Yeah, okay. We started this portfolio at $100,000. So I was selling about 3 option contracts for each trade that I'm taking. Right, so if you realize, right, that you're trading on about 20,000, you can actually sell 1 put option, right, on some of these stocks, which are not so expensive. Yeah, right. Like, for example, Tupperware over here, right, 1 option contract, right, if you get assigned the stocks, will cost you $1,600. Right now, can you see over here? That's about 10% or under 10% of your entire capital. Right. So unless, Mike, you're using it for some other strategies as well. Right, if you are using the $20,000 just to build a similar portfolio, right, you can actually follow some of the trades, right? But your trade size will probably be that 1 option contract. Yeah, okay, with that 1 option contract, right? Because even if you trade ETH over here today, right, if you get assigned on 1 option, right, your investment requirement is $3,500, right? That's slightly over 10%, about 15%. Is it 15 or 13% of your entire capital? Right, so that's still acceptable over here. Yeah, all right, okay. Jimmy, right now in these sessions over here on Fridays, right, my objectives have a longer time horizon, right? So you realize that how I analyze the trades here are very different, right, from what we do in our live trading sessions on Monday. Yeah, right, okay, because that's what we do with members. All of you are exposed to many more option strategies, right? And we can do this much more capital efficiently, right, with the strategies that we adopt. Okay, but in these sessions, right, okay, we're using cash secured puts, right? So I start off with a fundamental angle to the stock that I'm trading, right? I like it for the long term. I like the current price right now, right? I'm trying to sell a put option to make a profit from it. Yeah, okay, all right. Now, so I hope I answered those questions and help you in that perspective as well, right? Mike, all good, right? Okay, the aim of these sessions is really to show you what being an option seller can give to you, right? But also to help all of you and educate all of you to become better investors as well, right? But if you decide to start embarking on the next level, right, to bring even better returns to your portfolio, all right, Mike, I'm not sure if you are one of our members currently, but if you're not, right, then do consider one of our trading, mentorship programs. Yeah, okay, where we can take you to the next level after that. Okay, all right. Thank you very much. All right. And this brings me to the close for today's session. All right. I will be back for next Friday once again at 11 p.m. Singapore time or GMT +8. Hope you have benefited from my sharing today. Right. And we have added 2 positions with more cash into the portfolio. We have taken 1 profit on our trade position that's currently in the portfolio. Right. I'm happy with the results today. Right. Let's see what the market is in store. And we'll come back next Friday. Okay, everyone. Right. In the meantime, have a pleasant weekend, right? And I'll see all of you again next week. Thank you very much. This is Terence Tan signing off for this week. Bye-bye for now.